Good day. Welcome to the latest news update on Canary News. In a significant development, U.S. regulators have granted approval for exchange-traded funds directly investing in Bitcoin, marking a groundbreaking event for the approximately $1.7 trillion digital asset sector. The Securities and Exchange Commission, responsible for investor protection among its mandates, has authorized major industry players such as BlackRock, Invesco, and Fidelity, as well as smaller competitors like Valkyrie, to commence trading these ETFs starting Thursday. This approval signals a notable shift by the SEC, ending more than a decade of opposition that began with the Winklevoss twins proposing a Bitcoin ETF in 2013. BlackRock's unexpected application in June, coupled with an appeals court ruling criticizing the denial of a separate application, fueled speculation of eventual regulatory approval, triggering a substantial rally in the cryptocurrency market. SEC Chair Gary Gensler emphasized in a statement that while the SEC approved the listing and trading of specific spot Bitcoin ETF shares, it did not endorse or approve Bitcoin itself. He urged investors to exercise caution due to the numerous risks associated with Bitcoin and related products. The SEC's past rejections centered on concerns about the lack of a regulated exchange capable of effectively monitoring Bitcoin trading to detect fraud and manipulation. However, the latest approvals followed a review that examined the correlation between spot and futures trading, concluding that irregularities on exchanges like Kraken and Coinbase were likely to manifest in futures. Bitcoin briefly surged to $47,000 following the approvals, marking a relatively subdued climb. The original cryptocurrency, which experienced a 64% decline in 2022, more than doubled in 2023, driven in part by speculation surrounding potential ETF approvals. These ETFs provide a means for investors to gain exposure to Bitcoin within traditional brokerage accounts, moving away from crypto-native startups facing increased government scrutiny. Advocates in the crypto industry have long argued that a spot fund directly investing in Bitcoin would benefit investors and bring the sector closer to the more regulated realm of traditional finance. This decision is seen as a milestone in the industry's maturation, particularly after regulatory battles intensified following the collapse of Sam Bankman-Fried's FTX empire. The regulatory landscape saw another shift with Grayscale Investments winning a crucial victory over the SEC. A federal appeals court overturned the rejection of Grayscale's application to convert its Bitcoin trust into an ETF, criticizing the SEC's inconsistent treatment of similar products. Gensler cited the SEC's loss to Grayscale as a factor in the approval of the latest ETF applications, deeming it the most sustainable path forward. In other news, Google, a subsidiary of Alphabet Inc., is laying off hundreds of employees from its digital assistant, hardware, and engineering teams. The affected workforce includes those involved in the development of the voice-based Google Assistant and the augmented reality hardware team, as well as employees in the central engineering organization. This downsizing initiative is part of Google's broader efforts to enhance efficiency and allocate resources to prioritize its major product areas. The company faces increasing competition in the artificial intelligence sector from rivals such as Microsoft Corp. And OpenAI, the creator of ChatGPT. The job cuts follow Google executives' commitment to reviewing operations and identifying areas for streamlining, enabling resources to be redirected to strategic priorities. The layoffs also come after Alphabet's announcement in January of the previous year, indicating a plan to cut approximately 12,000 jobs, constituting over 6% of its global workforce. While the large-scale layoffs in January 2023 were anticipated, this year's reductions have been communicated by lower-level leaders, including vice presidents and human resources. Amazon.com Inc. has similarly laid off hundreds of employees in its Prime Video and Studios business, prompting speculation about potential broader layoffs in Silicon Valley. The affected Google employees will have the opportunity to apply for open positions within the company, according to Google. The Alphabet Workers Union, representing some Google employees, criticized the job cuts, expressing concerns about the company laying off workers while consistently reporting substantial profits. The union pledged to continue advocating for job security for its members. That is all the time we have for today. Tune in again tomorrow for the latest news update. Remember to like the video and subscribe to the channel.